Okay, those of you who have been with me for the last few years, it's like, I try to be level headed. I try not to be too extreme. And yet I'm looking at today and I'm trying to be disciplined here. But what I'm looking at right now, it's just absolutely terrifying. All right, maybe I shouldn't say absolutely. I'm not a huge fan of adverbs, but this is terrifying. Okay, and so don't take it from me, some random guy on the internet. You want to do research on this? Let me lead you to the horse's mouth, or lead a horse to water, whatever it is. Okay, look, all you have to do: Google Fed balance, do a Google search, Fed balance sheet, and then click on the first link here, recent balance sheet trends, and then you'll see a chart showing the Fed balance sheet, and you can see how much it's changed over the last few years. And then click on 1 year here, and you can see, all right, we peaked in, when was that? April of 2021, and then we started quantitative tightening, unwinding our assets. And then in the last week, well, I'm going to have to correct myself there, but in the last week, we have printed $300 billion in order to bail out some banks that are failing. But here's the thing: when I shared this chart with you, here's the thing I didn't notice is this chart is updated once a week, and it's updated every Friday at noon. And so here's what I want you to do: come back to this website, do a Google search, Fed balance sheet, come back to this website Friday, March 24th at noon Eastern time, and see how much in this past week between the 16th and the 23rd, the Fed has added to their balance sheets. I am afraid to look because here's the deal. Silicon Valley Bank collapsed on the 10th. That was a Friday. There was a run on the banks. 4 other banks collapsed. In Europe, Credit Suisse collapsed. They had to be bought out. And all that happened. This $300 million, all of that was added in just a few days. It wasn't even a full week. And so we have now the first full week that we're going to get a report on tomorrow morning or tomorrow afternoon, tomorrow right at noon, Eastern time at least. And I would assume, you never know with this stuff, but I would assume that what we're going to see is a new all-time high in the Fed's balance sheet. And this is just the beginning. I mean, the amount of work that the Fed is going to do, the amount of money that they're going to have to print, it's going to have to be trillions upon trillions of dollars just to save the banks. I already talked about the alternatives. If they let the banks fail, it's Armageddon. People aren't going to get paid. Grocery stores are going to get raided. I am not by any means being too dramatic. Who's going to stop them? The cops? Are the cops even going to be able to get paid? Will there be cops to stop them? And so they have to save the banks. But look at this chart right here, 2008. You can see some unrealized losses, and the Fed, the United States government, they bailed out the banks to the tune of $800 billion. And at the time, I was like, this is an atrocity. This is scandalous. Right now, we are off the charts in unprecedented territory that we've never even come close to when it comes to their unrealized losses. And how much more so is the Federal Reserve going to have to print in order to regulate this? And so what does that mean? That means runaway inflation. That means short-term inflation is going to come down. And it might actually come down pretty hard because of housing. Housing is finished. And, I am being a little dramatic there. Housing is pretty much, it's time for a bear market in housing, which housing is huge when it comes to inflation. And so inflation will come down, but then it's going to spike up big time, way beyond 9%, if the Fed is going to go through this and print trillions of dollars, which I guess is the better option than absolute pandemonium, but it's a terrible, terrible option. But hey, you know what? I could be wrong. Let's wait and see. Let's see what tomorrow brings with this. We'll see. I mean, maybe that was just one extraordinary week. I have a really hard time believing that. And I have a hard time believing that this is going to be undone by only $300 billion. But the amazing thing, the Fed raised rates yesterday, 25 basis points. And it's like, why would they do that? They're trying to communicate, oh yeah, we're fighting against inflation. They stopped fighting against inflation last week. The only reason why they would raise interest rates 25 basis points is to keep the wool over our eyes and make it look like they are fighting inflation. They are clearly not fighting inflation anymore. But they want to make it look like they're fighting inflation. So they raise interest rates by 25 basis points. And so now they're going to have to print even more money because these banks are going to be even more underwater. This is insane. No, it's not insane. It's wicked. It's wrong. CME FedWatch tool puts a 63.6% chance at a pause right now. There's no way. There's no way they're going to keep raising rates. They all that was a stall tactic. They cannot, in their right minds, raise rates next time. And I think Jerome Powell talked about that yesterday. We're going to raise rates one more time or something like that. I don't know. They're not going to. I have a really, really hard time believing that they're going to do that again, because I think some people are going to get smart to this and see, what are you talking about raising rates? You injected, by the time the next Fed meeting happens, they might have injected more than $1 trillion into the economy, multiple trillions of dollars. When is that? May 1st. Yeah. So anyway, I wasn't even planning on making this video, but I wanted to talk about this. But that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will see you in another video. Peace.